Hello and welcome back to Core Finance. Sometimes we get things wrong and we need to learn from that. In a previous video we looked at two calls that you got right, and hopefully they continue to go in the right direction for you. But we're going to look at a trade that
I called wrong.
You called wrong. It happens.
Absolutely. And it was basically the fact that seasonally, so there are two reasons why I think I got this wrong. I was very focused on this idea that September is usually a very strong, which is true. So historically, September and October have been, especially the beginning of October, have been very volatile and very negative months. Historically, it's been the case. And I was so focused on, maybe I put too much emphasis on this idea. And the fact is, as we can see from this chart, that didn't happen. September actually was unusually a strong period, which surprised everyone. So has been October. And look at this strong rally in September and October. Even the Halloween effect, which usually happens in October, by the Halloween effect, I mean usually in October, by the middle of October, you see a very strong move down. You see a correction, about 3% correction drop in the stock markets. Hasn't happened. Now, we can see that this rally in the stock markets actually is beginning to look rather dangerous to me, because the odds now of a correction of a 3%, I'll say 3% plus correction, could be 5%, is now even stronger. Look at this. According to that chart you see on the right-hand side, courtesy of Jason Geppert, and he looks at smart money positioning. Smart money, actually, for the first time, I've not seen this for quite a while, but they have been shorting. They've been severely short on the Dow. So they're betting against the Dow, which is not surprising. Question is this then, does that mean we just go short the S&P and the Dow? No, we don't have a setup yet. I always say, you know, no setup, no trade. So do we have a setup? I don't see one right then. But here's the thing. Let's keep an eye on 2600 on the S&P. It's not far off from here. It's only about, what, another 20 points away?
Yeah, not far off.
Not far off. I think once, potentially, we might get that 2600, 2085, 2685 level there. And then I'll be looking to see any short setups. I think there will potentially be, very likely we'll see a correction in November. Having said that, I did say that in October. Didn't happen. Doesn't mean there won't be one. But here's what I want to stress. Any correction that happens in November to December is likely to be a buying opportunity. I want to stress that. It doesn't guarantee there will be another rally higher, but it has been the case. And again, that's what's called the Halloween effect. The Halloween effect says that if in the month of October to November you see a correction, so a drop in the stock market of potentially 3 to 5%, usually that ends up being a buying opportunity, and then you see a strong rally from October, November to March, all the way to May.
Incredible.
Okay? Yeah. And in fact, this particular modification, this particular version of the Halloween effect, which is that you wait until October, November to buy, and you wait for that drop, has shown, historically, it's shown that you could make, by May, the stock markets could rise approximately between 5 to 7%, which is not bad. It's pretty, we can't sneeze at that. So, so here's what I got on the S&P and the Dow. I think likely we'll see a correction down to the averages, potentially the 55 EMA, and down. And then, of course, near the time, we'll talk about any potential setups. And certainly, I'm going to discuss that in more detail with our own premium members on Leading Traders. So feel free to get involved in that. Basically, be prepared for some kind of short opportunity here on the stock market.
Understood. On that note, Alessio, thanks very much for joining us.
Thanks again. Thanks a lot.